Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. I am going to talk to Mr. Brandon Cobb today. He's the CEO of HBG Capital. He's an expert real estate consultant and investor himself. He has been featured in the REI Wealth magazine and Forbes. He's here to share some actionable advice about real estate investing as a way to create passive income. So welcome, Brandon.
Hey, it's an honor. Thanks for having me.
Absolutely. So we start with this question with every guest. Tell us something interesting or funny about yourself.
Oh, I've never considered myself a very funny guy, but I'll tell you something interesting. I discovered a couple of years back that I had this affinity for really high-end steak. I'd always really liked steak. I'd always been a meat guy, but I had no clue that there was this world of Japanese Wagyu and Australian Wagyu and Denver steaks and picanha and like all these different cuts. I thought that there was just like ribeyes and New York strips and fillets and sirloins, and that was kind of it. And when this whole new world opened up, I don't even know if I want to share that. I probably spent more money than I care to share importing all these really nice steaks and smoking them and trying all these different methods. So I am a huge bougie steak guy. And, if you want to see what these look like, maybe we can get to my social media earlier, but I love sharing my cooking and I love sharing my really nice steaks that I like to eat.
That is, for me, that is funny. And you know why? Because whatever you said, it all went above my head because I'm a vegan. so sorry. But no, that's interesting as well. So let's talk about investment. What was your very first investment and how did it work out for you?
My very first investment I ever made was when I was around 16 years old. I invested in the Iraqi dinar. I kind of got sold this story that this Iraqi dinar, and at the time that economy was completely shattered. The stock market was just nothing, and the currency had been just hyperinflated away. It was almost nothing, and you could buy a lot, like millions of dollars worth of dinar for a couple $1,000. And I took a couple $1,000 and bought the Iraqi dinar, thinking that one day it would come back, it would RV, and the economy would recover. And let's just, say it was like I lost probably like 60% of my investment, ended up retrading back and getting my dollars back. But that was my first and probably one of my worst, probably the second worst investment that I ever made.
That's interesting. So how did you get started with real estate?
It was a funny story. If you'd told me 7 years ago that would be building these entry-level build to sell and build to rent communities, I would have looked at you like you had 20 heads. I never thought that I would be in real estate. Actually, I loved what I did. I was in medical device sales. Young guy in his mid-20s. I was the guy going in where if you had a rotator cuff tear or a labral tear, or you're an athlete and you had a torn ACL reconstruction, we would rebuild your knees or your shoulders using screws and implants and allografts. And I love what I did. I woke up every single day. I was excited. I got to rub shoulders with surgeons. I got to train hospital staff. I got to be part of the patient's journey where you take them from this immobility to mobility. So I had a lot of intrinsic satisfaction of what I was doing. I loved my job. And I had a meeting with my boss at Starbucks over in West End, over here in Nashville, coming off this great surgery. Part of our portfolio was capital equipment, and I had a really successful capital trial, and it turned into getting some of the business from this surgeon, some of his implant business. It was one of those days where you have the best day of your life as a sales rep. Like you're in the room, you're doing a trial, and then your competitor's product fails and does bad, and the doctor looks at you and like, I want to try you next time. You're like, dude, this is just a win. I was so excited to go meet with my boss, and I sit down from Starbucks, and before I can tell him all the great news, he fires me.
Right.
And I can't tell you how shocked I was when that happened, I honestly, I was like dead silent the first few seconds. I didn't know how to respond. And that was the moment where I really learned that nobody was going to look out for my financial well-being but me. At the end of the day, you can be as loyal as you want to a company. You can put in the blood, sweat, and tears, the hours. And at the end of the day, they're going to have to do what is best for them. And so that's what started me on my entrepreneur journey. I'd started 4 or 5 different businesses. I wanted to be the next Tony Robbins. I had a coaching business. I had monetized this motivational blog that I was creating. I started a coaching course on how to get into medical device sales. And then I also started real estate. And, 4 out of those 5 were complete bust. And real estate was the first one. I got into single family housing, kind of like a lot of people. I literally started just by driving around town, putting up those We Buy Houses signs. And that eventually led to us getting a foreclosure deal that we made about $35,000 on. And we took that $35,000, reinvested it back in the form of marketing. And for the first 4 years, just took all of the snowballing profits and kept reinvesting it back into the business in the form of people, coaching, masterminds, mentorships. I was just trying to put myself in the rooms with people who had already achieved what I was trying to achieve. And that's what I owe, all the success that I've had today in getting to where we are. So, fast forward now, we seem to just be pivoting with the market and kind of listening to the market and reacting to what it tells us to do. And, right now we see a huge opportunity in being able to deliver build to sell and build to rent communities to the market, to these entry-level renters and entry-level buyers.
That's awesome. So you mentioned Nashville market. So is that where you operate? Is that your main market?
Yeah, everything we do is within 45 minutes of downtown Nashville. Especially after COVID, it seems that all the demand moved to the suburbs now that people aren't having to drive downtown as much and show up to a cubicle.
That's interesting. So of course, Nashville grew as well as a lot of other markets like Charlotte, Raleigh, Austin as well, right? So how do you see the market now?
Well, Nashville is one of those markets that one of the reasons we're in is we do feel like it is insulated compared to a lot of other markets. And there's a lot of different reasons that go into that. But from a macro perspective, looking at Nashville, it's been one of the top 10 fastest growing cities in the United States the past 5-6 years, depending on who you talk to and which stats you look up. It is a business friendly state. From 2010 to 2018, there was $6 billion of private investment in Nashville. This is institutional money moving in and investing in Nashville. Since then, and with COVID, right now, you have over $4 billion worth of institutional money that has moved into Nashville just recently after COVID. So you have a huge influx of institutional buyers. And I think that's because Nashville showed the world that it is a business friendly state, kind of like Florida and Texas. We didn't shut everything down during COVID. So as a result, we're seeing a great migration of institutional money kind of move out of these really high tax states, these states that kind of shut everything down during COVID into these business friendly states. And Tennessee's one of them. And as a result of that, the economy has been booming. We've got some big names who've set up shop, Alliance Bernstein, Oracle, Amazon just finished a building downtown. You've got all these companies that are moving here because they're being driven by the higher tax states like California, New York, New Jersey, Massachusetts. And we're just seeing a huge influx of growth. Even with the interest rate hike that we had last year, I think everybody was thinking like, it's doom and gloom and, all real estate's going down, the bubble's been popped. And we just haven't seen the price corrections that the rest of the country have because we've got that insulation. When you've got droves of businesses and people moving somewhere, that means money's moving into something. And when money's moving into something, that gives it some insulation. So we still see a pretty long path to Nashville. Those who've been around a while compare Nashville to a younger Atlanta. And if that's the case, we've got a long way to go.
Right. I agree. So now this is great. And you mentioned about that you are also a passive investor. So I do want to ask you about what kind of due diligence you perform as a passive investor?
Yeah, so I put my money where my mouth is. I just like we work with passive investors who invest in our deals. I invest my money, and I do that for many different reasons. One is to get a good ROI. I like to invest in things that I understand,
Right.
preferably things that I can control. I was just on a call with a doctor yesterday, and he was asking me kind of, hey, should I put my money with you? What should I put my money in? And I said, look, I can't tell you what's best for you, but if I were in your shoes, I would put my money into things that you understand and that preferably you can control. Now, we can't control everything, right? You put your money in the stock market, you might be able to understand stocks. You might be able to understand that there's volatility, but at the end of the day, you can't control what the stock market does. I have a lot of my funds in our own syndications because I understand those deals. I can control those deals. But for the deals that I put my money in that I can't control, that I'm not directly in, I really like depreciation benefits when I'm doing due diligence. Due diligence can be extremely complicated. And I don't know about you guys, but I got like a 19 on my ACT the first time I took it. I'm not an extremely intelligent guy. I don't put myself in that pool. I was not gifted with these amazing genes. So I try to break it down very simple. I look at the operator and the deal, and both of those have to work out. So what does that mean? It means that you could have the best deal in the world. If you have a crappy operator or
Right.
sponsor, they can destroy that deal.
Yeah.
And likewise, you could have the best operator and sponsor in the world. If the deal is just a bad deal, there's nothing that they're going to be able to do. It doesn't matter how many years they've been in the business, no matter how good they are, they're not going to be able to take that crappy deal and turn it into a good one. So both have to work out. So as far as vetting the sponsor or the operator on the deal, and I vet both of them because those are two different things sometimes. I think one of the mistakes a lot of syndicator investors make when they're investing passively in a syndication is they usually have a lot of faith with the sponsor who's usually raising capital for the deal, but they don't do a lot of homework on who's operating it. In other words, the property management company who's turning and burning those units, or the general contractor who's building that development, or who is renovating the units. So I like to do my homework on both. And when I'm vetting these sponsors or operators, I like to have as many face-to-face conversations as possible, as little as 3, if not more than that. And what I'm doing is I'm getting to know them. And I won't go through all the questions I ask. If y'all want to get the questions, we've got an ebook that we wrote specifically for this situation on our website called 100 Questions Passive Investors Should Be Asking Before Investing. And, maybe we can talk about that later and send them to the website. We can go on our website. It's free. Those are mainly the questions that I ask. But what I'm really trying to do is I'm trying to get a gut feel for this person. What are their core values? What's been their experience level? How honest are they? I'll go and try to do some research on this particular sponsor operator, how many deals they've done in the past, where are they from? I'll dig up as much personal information about them as possible, and I'll ask them questions that I already know the answers to, and I want to see if they're trying to BS me at all, or maybe kind of skate around it or sugarcoat something that had happened. Like, I want people who are extremely transparent, and if someone's sugarcoating something that I've researched and I kind of already know the answer to, or they don't pass a background check, I do background checks on everybody that I invest with. Even my business partner to this day, I did a background check on him.
How do you do the background check? And I always talk about it as well, but how do you do it?
There's so many different websites that you can use. I'm not going to recommend one specific one, but pick one that you trust. Doing a quick Google search, there's Intellius. There's a ton of different ones that you can do out there. Not one's going to be the perfect one, but I do recommend you get a background check on anyone that you're thinking about giving money to. That's part of my due diligence process.
No, I agree. I always talk about it as well. So what are some of the red flags and gotchas when you are evaluating a deal?
So I won't do a full underwriting and spend 10 hours if it's, per se like a multifamily deal, but I'll skim stuff at a high level. It's not that hard to go and look at market rents in an area, right? It's not hard to call the apartment and just, see how things are currently being run. And I'm basically want to check and just kind of make sure some of the important numbers in that pro forma I'm being given are actually true. And again, the background of the operator, the deals that they said that they've done, is this a sponsor who has actually performed and gone full cycle on a full deals, or is it somebody who's just kind of partnering with other people and using their partner's background as a way to say, hey, I've done all these deals in the past. I just want to see if they're being honest with me, right? That's the most important thing. That's really what I look for when it comes down to doing some of the due diligence and some of the red flags. Really catching the operator or the sponsor saying something that isn't completely true based on the research that I've done. Again, a lot of what I ask comes from what I dig up off their social media, off doing due diligence on the information that they've given me, the pro formas, the past deals that they've done, their background and experience. I'll mainly look at that and then ask them questions and see if the story doesn't add up. Those are some of the main gotchas. I love doing business with people who come recommended. Real estate's a small world. Yeah. So if somebody else has had a pretty good experience with somebody, that's usually a good indicator. I typically don't invest with people who don't have at least 5 full cycles or have not been in the business for at least 10 years and don't have the specific expertise in a particular asset class. Because I know that there was an operator that I was thinking about investing with for senior living. And man, they'd been around since the 80s in multifamily. But I found out that this was their first senior living deal that they were doing, and they were the operator on it. And I was like, hey guys, I don't want to be the guinea pig. I'm sorry. Y'all are great at multifamily, value add, and that's what you do. And if this was that, I'd do this deal in a heartbeat. But you're self-managing this senior living deal, and you've never done that before. You're not hiring out a third-party company, and that concerns me. So that would be an example of a time where there was a great operator, and I still didn't invest because I didn't feel like there was alignment.
That's actually a great example, and I'm going to share my personal story, which I've shared on the podcast before. I invested with a very reputed multifamily syndicator, and I'm pretty sure you know his name, Neil Bawa, and he was doing his first student housing deal. I invested and I lost every penny in that deal, and every investor lost money because he didn't have any experience with student housing. And even they sold the property in 2021 and still lost money when almost everyone was making money, right? So I agree. So let's talk about what are some of the mistakes you have made with your passive investments?
Oh man, let's see. The older ones come to mind. I've been blessed. I'm gonna knock on wood here. Most of my current passive investments have worked out really well, especially in the real estate world. And again, I think the reasoning for that is I'm investing in things that I understand and things that I can control. That's the most important thing. But I'll tell you some past real estate deals that I did well on, but I do feel like I made some mistakes. Number one was I didn't hold it long enough. I sold too soon. So me having a background in single family real estate, I got started wholesaling and flipping properties, and I was always chasing that quick buck. How can I make a quick turnaround?
Flipping, yep.
Get rich quick. That's why I've invested in the Iraqi dinar when I was like 16 years old. Like I was like, oh man, my $1,000 is going to be worth millions one day. This is such a great investment. I bought Bitcoin in 2011, and everyone might think that was a great investment.
Because I bought in 2015, my first one. And we mine Bitcoin right now. We have like $40 million fund. We mine Bitcoin. So yeah.
That's incredible. I didn't have the forward thinking future like you guys did. I didn't have the vision. I was just like, I saw the run up from like $80 that my dad bought it at to like $1,100. And I was like, oh my God, I got to get it. So like I bought it at $1,100 when, if you were to equate it like 6, 7, 8, 9 months ago, when it was like $60,000 and Elon Musk was buying, like I just bought at the top when there was all that euphoria. And then, then I held on to it and just ended up selling it. So most of my mistakes that I've made in investments, besides the just terrible ones that I've made, are not holding it long term. So I was thinking too short.
That makes sense. So yeah, I bought it at 600 and sold Bitcoin when it doubled to 1200. I'm like, oh, I'm the genius. And now I'm complaining to myself. And I had like 2 Bitcoins and 10 Ethereum at $12 each.
Yeah. Hindsight's always 2020,
Yep,
right?
Yep. So what has been your best real estate deal so far?
We just finished up one, actually. We are seeing a ton of opportunity in the ground development sector. So delivering finished pads. It was a deal that we were going to go vertical on. So it was going to be slated for 36 townhomes. We're getting ready to go vertical. We got a knock on the door from a national builder and said, we want to buy it from you. And we said, well, it's not for sale. We don't want to sell it. And they said, well, what if we gave you this for it? And we're like,
Ooh.
how much did you say?
Right.
And, after doing that deal, we noticed that there's an opportunity here. And, I'm a big fan of the advice that the boat you're in matters much more than how hard you row. And so we're kind of noticing this really nice boat right now that is basically ground development, finished pads. So like we're getting knocks on the door from other big builders that want to buy our lots that we're developing. And again, our goal is to go vertical on it and, do these build to sell and build to rent communities. But right now we're getting bought out at extremely attractive prices. And, the one that we just closed ended up being the highest like margin deal for the time period that we were in. I think we're all in around 1.3 and we sold it for 2.4 and we're in and out in about a year.
That's crazy.
That was 36 pads and we're probably working on at least 200 lots right now that are similar in terms of that kind of deal. And that's what we're noticing right now. I don't know if it'll be here to stay forever, but it's something we're seeing right now.
Oh, that's awesome, man. What has been your worst deal?
The worst deal that we've ever done. Man, again, when I was younger, I could come up with a million bajillion different stories. I can tell you, we did some spec stuff where we were building really nice homes. When you get emotionally invested in something and you just want to Gucci these things out, like you almost like you're walking in it going, man, I want this home. This is my home. And so you're putting like lights underneath the stairs and you're doing just accent walls that'll melt your mind. And it's just a beautiful product. And then you just don't end up getting the ROI because you really liked it. Doesn't mean someone was able to pay what you put into it. Plus, we probably made some pretty big mistakes building some super nice homes and overdoing it, in my opinion.
Yeah.
But we still made money on those particular deals. Those would be some current ones that didn't work out as well as we thought. And then I could probably come up with a million past investments when I was younger that I lost a significant amount of money on.
No, of course. So this is great. Thank you so much for sharing all this, examples as well as ideas. Are you ready for fire round?
Let's do it.
Would you be changing any business or investment strategy because of inflation or recession?
We added selling supply products because we've got a really good relationship with vendors over in Turkey, and we really like that business model. That was a big pivot, and then adding build to rent to our portfolio, hanging on to stuff long term because of inflation.
Got it. Favorite investment, real estate or business book?
So many great ones out there, but I would go with I think it's Dan Sullivan's Who Not How.
Right.
That is, it encapsulate everything that I try to do in the way I think. I don't think of like, how do we do this? I think of who's already figured it out and incorporate them into the business. I
agree. That's a great book. Any tool or website you recommend or you cannot live without?
Especially with what's been going on with the news and interest rates and everything, I think that it's very important that people find a way to filter the news sources that are pertinent to them and their business. Don't be the person that learns the hard way that you should have been following the news and kind of what was going on. The writing was on the wall last year with interest rates if you'd been paying attention to it. So I would say that's been very beneficial.
any advice for beginner investors?
Create the problem and then solve it. I think most of the time they get, analysis paralysis. Go out and create a problem. They're like, oh, I don't have any money. I can't go get a deal. Go get the deal and then create the money problem. So just literally, you just need to start creating good problems for yourself. That's the best advice that I would give, and the advice I would give to my younger self.
That's awesome. How do you give back?
So we actually end up working with the local communities and the veteran affairs communities to identify a homeless veteran or a family who has lost a veteran, and we will end up gifting one of the homes that we build in these communities to that veteran or to that family. My partner, he used to be active military, so he's a veteran now. He's like battle combat wounded. He's been to Syria, Iraq, all of it. And, with his background and everything, we felt like we wanted to help be a part of the veteran community. And so our goal is to reduce veteran homelessness in Middle Tennessee by 90%.
That's awesome. Thank you so much for doing that. How can my listeners reach out to you?
So, if you're interested in learning more about us, I've got social media handles. My name is Brandon Cobb. I'm on all the different social media channels. If you're somebody who's interested in learning more about achieving financial freedom or impacting those close to you through unique real estate investments and creating passive income, we've got a ton of free information on our website, hbgcapital.net. That's harrybobgarycapital.net. We've got a free ebook on there, Recession Resistant Real Estate, dives into the strategies that we're currently employing. There's another ebook on there called 100 Questions Passive Investors Should Be Asking Before Investing. And the reason I wrote that book is I got a call from one of our current investors. He'd been with us for a few years one day and said, hey, I have a friend who really needs help. He lost all of his money in a real estate deal he was doing with someone else, and he's just looking for next steps. Would you take his call? And I said, absolutely. And it became very apparent very quickly while I was on the phone with him that this guy got screwed. The paperwork was wrong. And the one thing he could have done by preventing this just terrible tragedy is asking the right questions. When you're a beginner investor, you don't know what questions to ask because you haven't done it before. So I wrote that ebook if I could just prevent this from happening to one more person. So that's on our website. You can grab it. It's free. We've also got a fun, fantastic podcast called Recession Resistant Real Estate Radio. We interview a ton of entrepreneurs, fund managers, and we just talk about investing, passive income, and entrepreneurship and the fun roller coaster ride that it is. So you can check out that podcast as well. We're on there.
That's awesome, man. This was fun, Brandon.
Oh, that had a fantastic time. Thanks for having me on.
Absolutely. Take care.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing.